Hello guys, how are you? I'm EIP, your favorite YouTube analyst of financial markets. And today I thought I should discuss something useful with you guys instead of just talking about S&P 500 or NASDAQ. So here we go. So long ago, I came to realize this thing, that most people are reacting to the markets instead of planning for the markets. That is, that they were drawing, like, if the market was like this, and if it does something like this, then they would say, oh, the resistance is broken, we long it, long resistance is broken, only to see the market do it again. And then they say, oh, the support is broken, only to see the market do this again, making a flat like this. So it used to happen with me also. So this is the story of most of the people and most of the groups. So most of the traders which you will find on internet, that is, they would be reacting to the price, and they will be talking about support or resistances and whatnot, but not nonsense. And and listening to them is totally bullshit. So long ago, I found out and I realized that the only reliable way to trade is to enter over here. If you are bullish, then you should have the ability to enter over here, or enter over here. Or if you want to sell, then you should be able to sell over here. Only then you have good chance. Otherwise, reacting to the price is not going to cut it. So this was my realization, and most of my trading philosophy or methods are based on this philosophy, that the market is either trending or it is in a consolidation phase. So I try to enter during the consolidation and then take it up. I never react to the price because there is always a risk for this. So having said that, let me now discuss important chapter from W.D. Gann book or W.D. Gann course. And he talks about certain rules about how to determine culmination and change in trends. So I will read the chapter for you. So here it goes. The big money is made in the cotton market by following the main trend of big swings and not changing position or taking profits until the market shows by its own action that the trend has changed. If you will follow the rules, the market will tell you when the main or minor trend changes. Do not guess or trade on hope or fear. Give the market time to show a change in trend. The activity and range in price at high or low level determine the change in trend according to whether the market is normal or abnormal. Abnormal prices and fluctuations occur during wars or after wars. The year when crops are very large or very small cause abnormal moves which runs to the extreme. You must never try to guess when tops or bottoms will be reached in the abnormal markets, as they will nearly always run longer than human reasons or known facts would lend you to believe. This is what is currently going on with the Nasdaq or S&P 500. That is why you must apply rules and wait for the market actions to show a definite change in trends. Now, to determine the change in trend, we need to follow 4 rules. So the rule number 1 is time rule. The time factor is most important. When the time is up, time or space movement will reverse. Keep a record of days that the market react. That is actual trading days. Also keep a record of the calendar days of each reaction or rally. When a reversal comes, that exceeds the previous time movement, consider that trend has changed, or at least temporarily. After an important top or bottom is reached and the first reaction or rally comes, there is nearly always a secondary move which usually makes a slight higher bottom or lower top. The duration of the move may be 1 to 3 days or more, all depending upon the activity of the market and the duration of the advance or the decline. But your rules is to watch for an overbalancing of a previous time period before deciding the trend has changed. Now, this is easier said than done, and right now we are just reading it, discussing it. I have learned it, but I'm not going to talk about it in detail over here. I'll just read the chapter from the Gann's book, from the Gann's course. Rule number 2, swing bottoms and tops. When a market advances, it continues to make higher bottoms and higher tops on the main swings. You must watch all the reactions or bottoms. Then, the first time a swing bottom is broken, whether it is to be for 1, 2, 3 days or more, consider that trend has changed and go with it. When a market is declining, it continues to make lower bottoms and lower tops on the main swing. Therefore, when the last swing top is crossed, it indicates a change in trend. Now, those who are in my group, they know what I'm talking about and how much of a mathematical uh, addition we have made in our group. Mathematical, rule that we have introduced in the group in the change of trend that uh, occurs. A visual rule that we have added. So we know what we have to do when the swing bottom ends and a certain things breaks. So we if we are short, we reverse the position and go long. So this is exactly what it is. Rule number 3, space. But Gann over here just hints at the rule. Gann is very elusive. He just hints at it. It is up to us to decipher and detect what he actually tries to say. So, what my interpretation was, I introduced to you guys in my group. Rule number 3, space of price movements. By space movements, I mean points up or down from top to bottom. For example, suppose cotton starts to advance from 20 cents per pound and it advances to 25 cents per pound and makes top. Then reacts to 24 cents, advances to 26 cents, and then reacts to 25 cents and a reaction of 100 points. Later, it again advances as it did in 1946 and reverses, breaking back more than 100 points or a greater movement than a previously space reversal. This would this would indicate that the main trend had turned because the space movement had overbalanced the previous moves, indicating a change in trend. But you must never depend upon the space movement alone to give a definite indication of change in trend until it is confirmed by the reversal in time period by the market breaking the last swing bottom. Rule number 4, resistance levels. When a market breaks back one half or more of the previous swing, this is also an indication of a change in trend. In a declining market, a rally of one half or 50% or more of the swing is the first indication of change in trend. But these indications must be confirmed by time rule before you can be sure that this is a definite change in trend. A review and study of the past market movement will prove to you the accuracy and value of these rules. And here he's talking about studying of these markets. Average space movement. As a general rule, cotton will react in normal markets more than 100 points before the main trend is resumed. But when it is selling above 30 cents per pound. Reversers can run anywhere from 175 to 400 or whatever space movement that market had previously made. When this is reversed and exceeded, it will show a change in trend, especially when confirmed by the time rule. When cotton is strongest or weakest or in its weakest position. When cotton is advancing and is in the last stage of a fast upswing, reaction will often last only 2 days and then the advance will resume. An advance of this kind will sometimes run 42 to 49 days or 6 to 7 weeks. In extreme cases, may run to 3 to 4 months. Nasdaq has been going up for now 3 months, but around 84 to 90 calendar days. Nasdaq has been going up for 90 days. It is very important to watch for a change in trend. So there you have, my friend, the hint. How to determine culmination and change in trend from WD Gann. Now, this all is easier said than done. 99% will not understand this. And this is not just theory, there are mathematical rules through which you do it. So I just wanted to, talk about these things. Because when a change in trend is there, time is more important than price. So anyway, I wish you guys best of luck in whatever things you are doing. Bye bye.